A huge, huge difference, okay? You want to make sure that you keep your credit clean. How do you keep your credit clean? What kinds of things can you do to make sure that your credit record is clean? Pay your bills on time, period. Especially your mortgage, especially your rent. If you have utilities, pay your bills on time, okay? Don't bounce checks. What does that mean if you bounce a check? I write a check for $100 and I have $5 in my account. That check is going to bounce, meaning, sorry, you don't have enough money, okay? That's not good on your credit report. Also, in terms of building good credit, make consistent deposits. They like to see people who are savers, and since all of you are going to be paying yourself first, you're set with that, right? And it's also really easy to hurt or ruin your credit. And if you go back to, actually go to page 50, there's a whole list of things. Top left-hand side of the page on page 50. On the flip side, there are a number of ways you can hurt your credit history and credit score. Even just one missed payment can affect your credit report. So what can you do to make absolute sure you never miss a payment? Set it up automatically. Almost every single lender allows you to set it up so that automatically it's charged to your credit card or it comes out of your checking account. That's how you pay your bill. Okay? And if you're going to be mailing physical checks by the time you guys are paying your own bills, it's unlikely anyone will be doing that anymore. Mail it out at least a week ahead of time just to make sure that the lender has it in time and you don't get charged interest, you don't miss a payment, and ruin your credit. Bouncing checks, having too many credit cards and loans. There are people who have 10 credit cards. You need 1 credit card. You don't need 10 credit cards, okay? It's going to negatively impact your credit. Maintaining high balances on your cards looks bad, and changing credit cards frequently also can look bad. So make sure that you avoid all of that. So if you look at page 56, let's just do that exercise, 4G. What are your priorities? Using the credit information below, prioritize the order of the debts to be paid. So take 1 minute, prioritize them for me, and then I'll call on one person. So you all did exercise 4G? Okay. Can you just tell me what your answers were? No, right behind you.
Should I go in order of
You could just read the numbers down.
4, 1, 5, 2, 3.
Everyone get that? 4, 1, 5, 2, 3. You pay the highest interest rate first, and then as you pay that off, you go to the next highest interest rate, and then the next highest interest rate. You're all going to have checking accounts at some point soon. I promise 2 more minutes, and we're done with the section. What are some of the things you want to pay attention to? First of all, if you need money out of your checking account, what are you going to do? Withdraw it with your ATM card, right? What happens when you do that? There's a charge. How much is the charge? Depends. Some depends on the bank, right? Sometimes your bank charges you and the other bank charges you. It can add up to, if you go into New York City and take out cash, it can add up to like $4 or something crazy just to take your own money out of the machine. Okay, so you want to be very well aware of how much is it going to cost me every time I withdraw cash, right? And if it's going to cost a fortune, well, maybe I'll get a different checking account where it's going to be cheap. My bank actually reimburses me every single time I have an ATM fee. So if I have $10 of ATM fees during the month, I get $10 back from USAA. So that's the kind of thing you want to look for. Other things that you want to be aware of. Minimum balances. Okay, some checking accounts require a minimum balance. So if you have a choice between 2 accounts that are identical in every way, one requires you to keep $1,000 in it or you're going to get charged fees. One requires you to keep $50 in it. Which one are you going to go with? 50, right? You don't want to just keep $1,000 in an account that's probably paying no interest at all unless you really have to, okay? So you want to look at minimum balances. Other things, are they charging me a monthly fee? I have a client I just started working with. He sent me copies of all of his statements. They're charging them $10 a month to have a checking account. He didn't even realize it. You don't have to pay $10 a month for a checking account, okay? There are free ones out there. We talked about if a check is bounced, insufficient funds charge. You're going to get charged for that. How much will I get charged if I bounce a check? Well, this bank won't charge me. This bank charges me $50. Everything else is the same. Okay, these are the kinds of things you want to be looking at. And there's going to be an assignment after class that's going to ask you to shop around and find a good checking account, given whatever your needs are. Okay, so that's something that you'll probably be able to do it online, actually, just to research different checking accounts. We're also going to ask you to look at different credit cards and think what makes the most sense given my spending habits. So page 79 starts the unit on insurance. First of all, why do we need insurance? What is insurance, the reason for insurance? Yes?
It's kind of like a protector. It makes sure that everything you have is safe.
Right, it protects what you have. That's exactly right. Accidents happen, and you want insurance to ensure that you are protected in the event of an accident, whether it's a car accident, whether you have some sort of health crisis. You really want to make sure that you're protecting yourself against various risks. So for example, if you have a $20,000 car and you total your car, can you afford to replace it? Well, maybe not, and that's why you pay what's called a premium for an insurance policy that would pay you in the event that you total your car. They pay you so that you can replace it, okay? Basically, you're protecting yourself against the chance that something unexpected is going to happen. So let's talk about some risks that you guys face every day, that you can either avoid, reduce the risk, or insure. What do you think? Yes?
Well, like if we bring cell phones or iPods or cameras around, then there's a risk that we can leave it around somewhere or that it can get stolen.
Absolutely. If you have your cell phones, your iPods, your cameras, and it gets stolen, that's a risk, okay? So what would you... A couple of things. Number one, you could reduce the risk by not having any of that with you, right? Leave it all at home. Or you can make sure that it's covered by an insurance policy. What insurance policy would cover that? What do you think? Yes? If you lose or it's stolen, it probably is just if it's damaged. Right. Yes?
Whatever the provider for the services for phones, at least, they definitely offer. It's an independent insurance company, but they offer it to you.
Okay, I'm just talking about a general insurance. Your parents probably have it that would cover all of their personal property. Yes, homeowners insurance, okay? That would basically cover you. If you don't own a home but you rent, what do you get instead of homeowners insurance? Renter's insurance. Okay, this is another important takeaway, is that when you guys get out of college and you start renting, or even if you're renting in college, you want to make sure that you have renter's insurance. Renter's insurance covers all of your personal possessions. Okay? It doesn't cover the building like a homeowner's insurance policy would cover you for the building, but you know, if you lose something, if something's stolen, average renter has $20,000 worth of possessions. You want to make sure you cover it. God forbid there's a fire, you lose everything. Your renter's insurance would cover that. Okay? It's really important and it's very inexpensive. Other risks you face. Yes?
When you're driving in a car with your parents, what's the risk?
Absolutely. You're driving a car with your parents. They get into a car accident. There's a couple of risks you're taking. One, car is totaled. What kind of insurance do you need for that? Car insurance. What about if something happens to you and you go to the hospital? Medical insurance. Okay? Medical insurance is incredibly important because, God forbid, you're in a horrible accident. I'm sure you understand how medical bills can just get astronomical. And you really want to make sure that you always are covered by some sort of medical insurance policy. You will be covered on your parents' plan probably through the time you're a full-time student, most likely, depending on your parents' company's plan. Once you're no longer a full-time student, you're going to have to get your own health insurance. Most of you will have a health insurance plan through your employers. If you're self-employed, you're going to have to buy it for yourself. Okay? Or if you're not employed at all, you're going to have to buy it for yourself. And it's really important. And when you're young and healthy and you feel like, I don't need to worry about it, you know, I don't need to go to the doctor, what you've got to think about is the possibility of an accident. And you need to make sure you have the minimum of major medical insurance, meaning if I get into a terrible accident and it costs millions of dollars of doctor's bills, that I have coverage for that. Okay? Can you think of another possible risk that you might face that you could either reduce or avoid or buy insurance to protect yourself? Yes?
For natural disasters?
Natural disasters like floods, yeah?
It's not normally covered.
Very good. Good point. Flood insurance is not part of homeowners insurance. So if you live in a flood zone, you're going to have to buy separate flood insurance. And when you're looking at homes to buy, you want to understand, is this home in a flood zone? Number one, do I want to live someplace that's in a flood zone? Number two, how much is the flood insurance going to cost me? Because it could definitely be a couple $1,000s. Okay? What